This video is going to be packed with ULTY information. The YieldMax Ultra Option Income Strategy ETF, it was at 605 when I made a video just a couple of days ago. Then it crashed on Friday to 590. At one point, it went all the way to 586. So if you were able to pick some shares at 590 or 586, then your yield is very high. And depends on what the market does next week. It might go up. I don't see it going down further than where it is. It might just be floating between 590 to like a 580. And I'm going to show you the reason why that is, because we're going to compare the performance of ULTY as compared to S&P 500. And in this video also, we're going to look at estimate for next week distribution. And I'm going to show you net asset, how much has accumulated so far. So if we look at the volume of ULTY, is very high volume at 36 million. So this is insane for an ETF like this. Remember, this is one of the top popular YieldMax ETFs. It's just behind MSTY. I think for now, the average volume is around 24 million. That's a huge. I know this is apple and orange, but I want to compare ULTY versus S&P 500 for people who are worried, because there's a lot of talk that ULTY is actually going to even $4. And there are a lot of articles been made about ULTY that is going to lose a lot of money. But I want to see the performance that it has done recently. Is it outlier or that it just goes with the market? Because if we look at other ETFs, they're all going down. So if we compare ULTY versus S&P 500, which is VOO, this is a Vanguard S&P 500, you can see the chart actually, they're pretty much in sync. And this is comparison within just 6 months. I'm not saying they're apple to apples, but if we look at the graph, meaning ULTY is literally just going with the market. Look, within 6 months period, this is a total return, meaning including all distributions you put back. Well, we know S&P 500 is more of a total return, and ULTY return is based on the distributions reinvested. So ULTY, you are up a little bit, about 8%, and S&P 500, you're up about 6%. So ULTY has beaten S&P 500 if you put all the distributions back to the share price, about 2%. That's significant. But if you stretch year to date meaning from January to now, ULTY is up about 14% and S&P 500 only up about 10%. So ULTY is still beating S&P 500. But what is necessary is this performance chart. You can see they're literally in sync. If you stretch within 1 year, ULTY has beaten S&P 500 about 33% for only 20%. But if you stretch to 5 years, meaning this is the time that ULTY has been around, so it's more than a year and a half or about 2 years, then we are seeing ULTY is obviously underperformed, has returned only about 16%, where S&P 500 is over 100%. Again, we are not comparing apple to apples, but I just want to show you the graph performance within just 6 months, even 1 month. You can see they're going pretty much in sync. So this tells you that, put other things aside, I know this is apple and oranges in terms of what these two funds do, because they do different things. This one here, ULTY, is for income investors, and of course S&P 500 VOO is for general market investors and growth investors. But what I want to show here, or the main point I want to show here, is the performance chart, that they are going pretty much the same. And of course, the other thing is that S&P 500 or VOO, if you invest in S&P 500, you always pay very low expense ratio. For example, VOO is only 0.03 and ULTY you're paying 1.3%. So very high MER. But of course, if you look at the dividend yield, you are getting only less than 2% for S&P 500, because this is a growth fund, and you are getting over 120 for ULTY, YieldMax Ultra Option Income Strategy ETF. And this is another graph performance you can see here in 1 month, 1 year, 5 year, and since inception, ULTY has underperformed because it's only like a 6.64, and VOO is up about 14%. And of course, this inception, meaning this is just a performance, but if you reinvest, then you're up about 16%, as I've shown you previously. And we obviously know these two ETFs have different holdings because ULTY is mainly in more of very volatile stocks versus S&P 500. These are the biggest 500 companies in the United States. For example, ULTY right now has about 25 holdings. They have Coinbase at 690. We know Coinbase is very volatile. They have Rigetti. These are the top holdings in terms of percentage. And they have Space Mobile at 551. This is hugely promising because that's been going up. They have Applevon. They have Ion Q. So they have a lot of quantum computer chip stocks like Rigetti's and Ion Q. They have higher promising, but the main reason why ULTY is holding is not for growth, is for their volatility. And they have a Reddit, and you all know Reddit is very volatile. We have Mara, very volatile because it has a lot to do with the crypto. And also they have MSTR, also very volatile stocks. They also have Tesla, they have Webull Corporation, they have a Palantir, a Supermicro Computer, Applied Material, a lot of volatile stocks. And for S&P 500, we don't have to mention. Some of them overlap. For example, here they have Palantir. Here they also have Palantir. I think Palantir is one of the only stocks, maybe also Tesla. So I think Tesla and Palantir, they're the only stock that have overlapped. Robinhood too. I'm not sure if Robinhood is already added on the S&P 500, but they're different companies. And of course, this is for growth and more sturdy. And this is for generating premium to generate income. If we go back to Yahoo Finance, we can see here performance overview. ULTY, a 1 year has returned 29%, category is 11%, a 3 year has returned 9%. This is since it was incepted. But on that day, which was yesterday, if we look at the YMAX was down, if we look at the MSTY was down, we look at the Coney was down, Nvidia was down, YMAG was also down. So ULTY wasn't the only ETF that was down that day. When it comes to sector weight, 37.34% of ULTY is all based on technology. As I've shown you, most of those technology companies and a lot of quantum computing, because those are very volatile stocks. So it makes sense. There are financials. That's your Coinbase, of course, as financial. And your Maro is also financial. And MSTR is kind of financial in a way. MSTR is both like a financial and technology at the same time. And you have communications, you have industrial, you have utility, you have healthcare. So it's a pretty diversified in its own right, but it's not as diversified as, of course, you're investing in S&P 500. So it makes sense most of their stocks will be tied to technology because we know our technology sector is more volatile and you need volatility to be able to have a huge premium and therefore huge distributions. So on Friday, Bitcoin was down, crude oil was down, NASDAQ was down. And other income ETFs, for example, qdte, MSTW, AAPW, Tesla, MicroStrategy, HOI, Nvidia, Coney, everything was down except HOI actually was a little bit up at that day at 2%. So when it comes to volatility, guys, there's nothing new about ULTY. That's the nature of the beast. The market overall right now is very volatile. So this shows me that when the market goes up, of course, ULTY will start rebounding, go back to where it was at whatever price, 6 to 6, maybe 15, but it will float around $6. Unless something big happens, for example, if there's a market crash, of course, ULTY will follow the suit. It will go very, very low, as we've seen on the chart. I mean, they do have some protection in their strategy. So now let's look at the ULTY at 590. Using our average distribution of 10 cents, now ULTY is about 91.22%. So I don't know about you, man. I think this is a good yield to be able to take some risk. I'm not saying you go all in, but if you buy at 590, this is a good price because a lot of people get scared to buy at these prices and they wait till it goes back to like a 615 and you buy at that point. When it goes down to like 590, you have lost quite a bit of money. On Thursday, I picked some shares at 590. My cost basis right now at ULTY is around 612. So if you do the math, of course, 612 to 590, I'm down in terms of a price. But because of distribution that I have received, my portfolio is up massively on ULT's position. So I'm really, really happy. And of course, if it goes back to 612, I'm going to be flat in terms of price. But because of the distribution that I received, then I'm going to be way up. As you can see here, these are my ULTY dividend that I have received for months of July. There's more history to July. And of course, August 1st, August 8th, and August 15th, which was yesterday. operation here, as you can see, is dividend. Quantity of the share that I had at that time I received those distribution was 10,000. So it's very easy to do math. 10 cents times 10,000, that's about 1,000 and some changes every time they pay me distributions. And of course, I added more shares. As you can see here, this is the net amount I received. That was July, and this was August 1st, August 8th, and August 15th. And this is the share that I have right now. I added more to reduce my cost basis because it was a little bit higher. I bought 5,000 shares. So next time, that will be 1,500 for next week distribution. And talking about next week distribution, I'm going to show you how much they're going to pay next week. I just want to say something here. This ULTY position I'm holding, I'm not saying I'm holding this forever. It's just something I'm holding for now. And I'm going to play by ears and see how ULTY would turn. I don't want to be a cult, meaning I'm going to be all in ULTY forever. No, I don't know. The market, as they say, date a stock, don't marry them. So I'm not going to be 100% loyal to ULTY. I'll see how it plays. If it plays good, I'm going to keep it. If it doesn't play as my strategy allows me to, then I'm going to sell. But for now, I have 10,000 shares and I added more 5,000. So all together I have 15,000 shares, a lot of money invested in ULTY for now. So in short, look at your investment and see if their performance or their distribution allowing you the strategy. If not, then you can always switch. And how do you know when to switch? And that's when you need to keep up with updates. And on this channel, I always keep you an update on all these ETFs. So in order for you not to miss, please consider subscribing to this channel and hit the notification button. So whenever I release a new video, you'll be able to receive new updates. And don't forget to smash the like button and share with someone you think this video might help. So now let's look at the ULTY net asset. Despite ULTY going down, its net asset keeps going up and NAV it's at 591. So NAV hasn't decline more than the price, which is a pretty good. So NAV is pretty much on par with its share price on open market. Last time I made a video, that was only a couple of days ago, it was at 318. Now it's at 335. As I've mentioned, ULTY is going to 4 billion very soon. It's literally catching up with MSCI because MSCI right now is at 5 billion. That's crazy. And ULTY, just a few months ago, it was like literally lower than 1 billion. Today's last update will be on ULTY distribution estimate for Group C. The declaration for Group C dividend or distribution will be August 20th. And the circle for this time will start August 8th and ends August 16th, which is pretty much today. And ex-date and record date, August 21, 2025. Payout will be on Friday, August 22. So current profit and loss based on this period when they are going to announce the distributions will be around 66.6 million. Profit per share is 12 cents. IV based estimate is around 8 cents or 70%. Now let's look at the distribution estimate. So this time ULTY will pay less distribution according to the data that I have right now. Guys, this is just based on estimate. This number might change based on what YieldMax has before they announce their distribution. But as we know, this period is pretty much ended. And this is the numbers that we have, about 76 cents to 89 cents. So when it comes to 89 cents, I would say this is more plausible because we've known ULTY has paid between 7 cents to 10 cents. On average, it's about 10 cents they have paid since they changed to weekly distribution. But they have paid about 9 cents a few times. And this is probably what they're going to end up paying. I wouldn't be surprised if they pay 10 cents, but 9 cents is really normal. And that will be around 67 to 78%. That's a yield based on the price that is going to be, but it depends on how much you've purchased. So if you purchase at the lower price, that means your yield will be a little bit higher than this. And of course, if you purchase a higher price, your yield might be lower than this yield showing up here. So guys, that's all I have. I just want to keep you updated on the ULTY major updates that we have for today. And that was the price, that was his distribution, that was his estimated distribution coming up. And the most data we also got is comparison between ULTY and S&P 500. And we've seen how that was. So if you have any comment, please leave your comment below. I'm going to make sure I'll answer those comments whenever I get opportunity. Thank you very much for watching today's video. I'll catch you next video. Bye bye.